Key points on candlesticks. So the first key, 1. Candlesticks are a reflection of what buyers and sellers are doing. 2. Use candlesticks in combination with areas of support and resistance, because we are using candle as our formal price action and confirmation that price is indeed respecting this area of support and resistance. Now, what kind of candlesticks do we like to see? 1. They are long wick candles, and the longer the wick, the better. So notice this wicks that occurs formed right at resistance, followed by price handing downwards. And again, the wick is sticking out right at support and price takes on upward. Now remember that the longer the wick is, the better. The candle here is perfect. This is the candle with a very long wick reflecting resistance, and then the price moves downward. And again, another very long wick candle rejecting support and then taking on upward. 2. So here is a combination of both, a very long wick, another very long wick, and just a standard long wick. So what add even more strength to candle is something I'd love to see, which is even multiple candles rejecting an area. It shows that price tried more than multiple times to push through together and failed. 3. Multiple candles rejecting an area. So here you can see the first rejection through a long wick candle, and price then proceeded downward. And here again, we have back long wick candles projecting this area. 4th, engulfing or momentum candles. So another candle we would love to see are engulfing candles, which is when the candle is very large in comparison to the previous candle. As you see, this candle here is very large in comparison to the candle to the left that shows massive buying pressure. Now, as you can see, we have long wick candle followed by an engulfing candle. Engulfing candle works best right after it comes after a long wick engulfing candle, to show that the price is indeed accelerating in the desired direction, which is the most secure way of entry. It all depends on your style of which you prefer. You can interact the long wick, or you can for an extra confirmation of the engulfing/momentum candle. Now over to the right here, you can see that all you have is engulfing candles, which also works very well, and as you can see how price 2 off afterwards. Now this next part is very important, as I'm going to show you a combination of all these candles in action. Remember, we use candle only after it has been established an area of support and resistance. 5. Look for candles after identifying key levels first. So we have a long wick candle and a long wick engulfing candle, and then the price tends down. Now look at the candle that are rejected in this area. So candles tried to push through and failing, which is a huge signal that price is going to reverse. Again, multiple candles rejecting this area before dropping down, and again, multiple long wick candles rejecting this resistance before tanking down. Here we have resistance followed by a long wick candle and then an engulfing candle, and then the price tanks down. And on the right here we have multiple down, and on the right here we have multiple. Here we have resistance followed by a long wick candle and then an engulfing candle, and the price tanks down. On the right here we have multiple of a long wick candle rejecting this resistance before tanking downwards. And again, support down here we have an engulfing candle, and then price takes off upward. 6. 2 very important trading ideologies you must use in your trading. First, when price is coming up to an area of confluence or key level, you have no idea if price will break through or react to the level area and present a trade opportunity. You always need to wait for price action forming through candlesticks or chart patterns before you decide on whether there is a trade opportunity or not, or whether it enters your watch list or not. Meaning, it doesn't matter how quality a key level is. It doesn't matter if you have a high confluence area where 100 traits cross. If price reaches the area and you don't have candlesticks or chart patterns forming and reacting to the level, then there is no trade. Because the area of confluence or key level is not validated, meaning for whatever reason, the market is not interested in the key level or area of confluence this time around. There are thousands of things going on in the market at the same time, so any reason could be the one why buyers or sellers are not taking action at the level. So if you don't have candlestick patterns or chart patterns forming and reacting to the key level or area of confluence, then that means there's no interest for the trade opportunity at the area and no trade. The second one is, when you see candlestick patterns form at a key level or area of confluence, always look inside of the candlestick pattern formations on the lower time frame to see what you can find. Before you look inside of the candles, you have no idea if there will be anything or not, but knowing to look is the key. If you find a reversal pattern or divergence inside of those candlesticks, this makes it a high quality reversal opportunity, but as always, you still need to wait for a trend change confirmation before looking for a reversal trade entry.